how we're doing. It feels like a really rocky ride this earnings season, especially if you're not putting up profitability and key metrics like that. What are you getting as far as the health of corporate America and the outlook going forward?
Yeah, no, I mean, on an individual security basis, it's certainly been rocky and very volatile. But when you look at the market overall, you look at the S&P 500 from an earnings and sales perspective, it was a really, really good quarter. Now, the beat rate still very impressive, not quite as significant as the last 6 quarters, which we had double-digit beat rates. But it was a great showing. What was most important was that we saw sales come in better than expected, and margins, EBIT margins, have been able to hold steady. And for the outlook, we don't get a lot of S&P 500 companies giving us outlook or guidance anymore. Most of the time when they do give guidance, it's negative, but we have gotten a couple positive. But when I look at the consensus, we've seen the consensus estimates for sales move very slightly higher. And again, importantly, margins standing pat at near all-time highs at 17% on an EBIT margin basis. Now, earnings per share have come down a bit for 2022 expectations, but all in, the corporate profitability, the corporate earnings picture, the corporate sales picture looks pretty decent.
Victor, you mentioned some of these mega caps being, or big cap tech stocks being carried out in a body bag. All the FANG stocks are not doing well except for Apple. Netflix, though, finished the day up by 1.2%, is actually a relative outperformer compared to its peers in FANG as well as the NASDAQ. And I'm wondering if that tells you anything, or if any of these FANG stocks look interesting.
That might you might see a little bit of capital rotation. Scared investors from Roku might have run over to Netflix. So I think volatility likely here is the winner. It's really difficult, I think, in this particular environment to try to pick a bottom or to try to make heroes calls. But I think you can just take what the market is giving you. And right now, the market is giving investors high volatility. And that's not just a gauge on the fear of the overall marketplace. There are ways that savvy investors can utilize that increased fear and volatility that's being priced in, and you can use it for your advantage, whether or not you're selling calls against your existing position, which is effectively selling upside, selling some of that upside to take advantage of high implied volatility, or if you're nervous about downside, whether it's Facebook or Netflix or some of the high beta instruments, DraftKings, for example, at 15, the 15 puts are trading like $1.20 out in April. So there are ways to utilize this increased volatility and sort of utilize it for your advantage for cheaper entry prices. Because the thing is, in this environment, it's very easy to look at a chart and think that price is mean reverting. Because 3 months ago I saw a price of this, then I should see in the next 3 months a price return. That doesn't have to happen, but volatility is mean reverting. So utilizing it when it is high is a higher probability, and I think a lot of investors are putting that into practice right now.